Okay guys, we're gonna go to the Discord and Traders Clinic today and answer some questions. So let's roll the intro and we'll get into this. And a warm welcome to one and all. Let me just have a quick slurp. I've been making videos all day today and my throat's as dry as a bone. But what we're going to do is we're going to jump over onto Discord. So let me do that now. And we're going to work our way into Traders Clinic. And just while I'm here, every member that starts comes here to the start page. And there is a video how to connect to the Discord, which shows you how all this opens up and a walk around. Okay. But if you're stuck, go into the help and it's open source. You'll get your answers there. If you can't be bothered with this page, you're probably not going to survive in trading. So that's just like a little housekeeping thing. Then we come into it. You've got your video vault here. There's over 3,500 videos in here, including where the Scruff. That's broken up into modules. And the Trader Clinic, which again is in running order. Okay. And then you've got all of your different things. You've got your strategy videos down here, my interviews, because I've been around a while, etc., etc. You'll find recommended brokers and tools and discounts in here, updates of live streams, etc. here. Trader Talk, where well, that's exactly what it says it is. It's just talk. In the lounge, they'll take the mickey, have a bit of a chat. Bulls and Bears, they talk whatever charts. This is the small success where we're building up accounts. I put market updates in here all the time, whether it's my strength sheet, news updates, chart reads, etc., etc. And then they've got the rest of them down here. Rogues Gallery is just us because we do get together. And the one I want to bring attention to here is Benidorm, because we're going to be having a Scruffy meet on the continent in Benidorm. I'm going to be there for the week. I've booked a hotel for the guys.
Good job.
And I'm paying for this. And the reason why I'm doing it is I've really got loads of time for these guys. They pull together. The whole group genuinely pulls together, or at least 90% of them. They pull together. They talk to each other all the time. And they might have started as strangers, but they all become friends. And that's why I make a big point of, if I ever go anywhere, I will catch up with the guys, as you see here. You know, if somebody can't be bothered to meet you in person, do you really want to know that person? That's the way I look at it anyway. I'm very open. So I'm really proud of the group and the guys that's in it. I've met some wonderful people over the years. Apart from you, big balls, little hobbit, Finny, and haircut. Pain in my arse, you two. No, you're not. You're great guys. You genuinely are. So, stop throwing challenges at me because you stress me to death. Anyway, right. So, getting on to this. I'm doing Stuart's question today. I have answered the others below. Caught them all up. Every single question here gets answered. Every one of them. And this question is, how do you look at the VWAP and what's the bell curve? Okay. I don't use the VWAP as much as I should. I do know roughly what it is. But to give you a quick idea, VWAP stands for volume weighted average price. So let's flick it on and we'll have a little look at it. So down here, and as it says, volume weighted average price. And when you first look at it, it's really just a moving average is the first thing you would look at. Now, the clue is in its name, volume weighted. It's based on the volume of the market. So that lends itself to a time of day. And the time of day is market hours, and we'll touch on that in a moment. Now, one of the other parts of the question was the bell curve. Well, the bell curve is, in layman's term, where it pulls away from the average. Now, we can see it here. And I prefer to use live charts straight in front of you. And if you look down and you see the date, you'll see it's this week. I don't believe in rollback charts. This is a bell curve situation here. kind of here, here, and here. Now what the bell curve is where the market price, or the price itself rather, moves away from the VWAP, this black line, gets saturated and snaps back. Now most of the time, price runs pretty darn close to the VWAP, as you can see. Keeps it priced nicely and hooked. But what happens is, if it accelerates away, and it does, it'll snap back to the VWAP with some gusto. Now, there's a couple of things you can take from that. You can actually use it as a volatility meter as to where you're going to place your stop on the other side of the trade. Because if it's run that far over the VWAP, it can run that far this side of the VWAP. So for argument's sake, if you're going to place a stop and you go, well, it ran away from that candle to that candle, you can see it started there, ended there, came back. So that started the acceleration and that was the deceleration. Well, if you're sort of going long yet again, that is there, it can kind of contain the price and it can help you with stop placement. So you would use it that way. But what about getting into a chart? Things like that. How can you use it? Well, first thing is you kind of just eyeball it. Prices above, we're only buying. Prices below, we're only selling. Very similar to a moving average, but you need to look at the market hours, which is what I want to come on to. If you are looking at this between the cash open, so for London, sort of opens at 8 o'clock, shuts around 4:35. Now you can take into account the pre-market, so say 7 till 5, London. Outside of that, it'll just slow down a little bit. So the FTSE would be within those market hours. Outside of those hours, it's synthetic market, and this doesn't work as well. So when it flips over into New York, you then look at something that's live in the New York session. So the S&P 500 for argument's sake. And then Asia, the Asian session, it's normally hugging around the VWAP just because it's low volume anyway. Okay, but we use this as an example as to how to get in. So there's this week's chart, and we can see it, and you can go, okay, how do I do this then? That's very simple. You use your hourly and your 5 minute. So let's just mark out some times. Well, I'm here. So Friday, we'll take this through to Monday, 7 o'clock candle. That's this one. And then you mark in till 5 o'clock. Okay. Just so that we can see it. So that's there. Well, it's predominantly above the market, isn't it? Okay. So you come in and you want to be looking at trigger points at the end of each part. So it's nice and simple. So it's above the market. There's only really between 9 and 10 when it wasn't. Okay, so it's a predominantly moving up market. But how else can you filter this before you go? Well, why not just put a moving average on, a proper moving average? So you can get your moving averages, just like so. And you want a 20, so it's set to 20. I'll just change the color, just so that you can kind of see it. We'll put it like a burnt orange or something like that. Yeah, burnt orange will do. Okay, so what does this now do? Well, you now look that you're above the moving average in price, and every time the price is above the VWAP, you're in line with what this is doing. So it's very simple. So here we are, price is above the VWAP, price is above the VWAP, this is below the VWAP, so you stay out, it's come back above the VWAP, and then it's above all day. Right, so apart from this part here, between 9 and 10, you are predominantly buying the market. take it down to 5 minutes. Just find that. I'll have to scroll back a little bit because obviously 5 minute chart. I'm going to go back a couple of days. So there's the lines that I drew. You don't need your moving average anymore because you've already established that the only thing you're going to be doing is buying the market, and you buy the market every time it breaks the VWAP. Okay, so it comes down here, boom, boom, boom. Well, that's 9 o'clock, broke it. Is it a good signal? Well, no, because at 9 o'clock and between 9, it broke underneath. Okay, so you might just say get that in, but I'm going to use this as an idea because we know this section, when we looked at the hourly without flicking back, was when it was selling off, but it was against the grain, so you would be out of the market. But let's just say you were compelled to go to market. There's your order point because you put an order above the candle. Stop placement is based on whatever your stop criteria is, whether it's a fixed pip count, or the way I do it, I use a solid level and a swing point, and I'll put it underneath there. And if I think the market is wrong, then I'll just get out. Okay, and then I'll measure it out to roughly about 1 to 1. That's the way I work things out. Now here, the market pulled away and closed underneath the VWAP, but it wouldn't have triggered the order. So therefore you would delete that order, came back, didn't get above, didn't get above, didn't get above, didn't get above, got above here. So you would put your order there. If that didn't trigger it, that red one would have done, and then you're off to the races and you're looking to get your profit. Okay. Now, depending on how you're doing this, if you're using swing points, 1, 2 swing points, your stop placement is down there somewhere. So you just mark that in. All right, just as a swing. Just using this as a basic example. If you're looking at a one-on-one situation for a day trade, you need that to get to 21 pips. That runs up there, triggered you in, and later on in the day, you'd have hit your 21 pips. And then you come to the close of the day. That's it. That's your setup. Nice and easy. And essentially all you've done is you've used the VWAP to help use a trigger based on volatility of the market and volume. Now, your moving average shows you a rough direction. Again, the volume is in the direction that you're establishing. In other words, VWAP is above the moving average, price is above the VWAP, and then you just target appropriately and place a stop appropriately. Drop it into a low time frame, in this case a 5 minute, and every time it either touches or breaks that VWAP, you go to market with the established target and stop. That's a quick overview of how the VWAP works, or how you could use the VWAP. So I hope that helps. We'll touch on it more in the group, but as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.